Let's begin. In 2023, the frenzy we've seen in the primary markets, all the IPOs, we've seen the debut of 60 companies on the index with an impressive 93% of them delivering positive returns, which makes it 56 companies in total. The IPOs have yielded a remarkable 57% return if you look at their performance for the full year. Now, expectations are high among investors, so we've gone on ground to understand how retail investors have participated in the IPO boom this year. Here's what they said.
Every IPO may make the profit. If you sell it on the same day, you will profit for the 10-15% somewhere that. Afterwards, that is your luck, whether it will go down or up. Just in this market, apply the IPO, you will get the money. If you will get the shares, sell it on the same day, you will get the profit.
Mostly the IPOs, good IPOs get oversubscribed many a times. So it's a lottery. So I was unfortunate not to be allotted. But those who have allotted the IPOs, they have made good money. IPO, I did not invest. All the good IPOs I was in Tata Technology, maybe. I did not invest in. I did not apply. I apply in ONASA, and that was my regret.
I have been invested in around 4 to 5 IPOs invested, but unfortunately not able to get that IPOs. See, we have to check what is the performance and what is the applications and allotted. Accordingly, we have subscribed the IPO.
The profit was almost say 25%. At present, our target is more of blue chip companies, and the background of the promoter should be good, like Adani, SDFC, or Reliance. So if the background is good, then you have more confidence in investing.
I got profit in IREDA, and today I have got profit in Innova. That was around 25%, and very handsome profit I got in Madhusudan Masala. There's various IPOs, but allotment ratio is very low. But wherever it is allotted, that is giving handsome profit. The IPOs coming in 2024, in most of the IPOs I will invest.
The allotment is a bit messed up. We don't get allotments as quickly right now, and it's getting all oversubscribed generally. Okay. So we're not really getting the allotments, but on market we usually buy it off. Majority all are coming into profit as we keep watching the market premiums also. But overall the market is doing good with IPOs right now.
Well, yes, that is definitely true. The markets are abuzz. The primary markets have seen that much more action. And listing gain seems to be one of the strongest reasons why we are seeing this kind of retail participation. Domestic investors certainly enthused about it. Let's discuss this further with Vikas Khattar, who is the co-head of investment banking and the head of equity capital markets over at Ambit. Great to have you with us, Vikas Khattar. The Mankind IPO, it turned out to be a bit of a game changer for the primary markets this year. But overall, looking at what these investors have to say about how well they've done in the primary markets, what you're picking up from issuers, why they are getting so much more confident about approaching the primary markets to raise funds, that's been the story through 2023. Do you see this confidence get stronger, both among issuers and domestic investors through 2024? And what would be the prime reasons for it?
Thank you, Vikram. Thank you for having me here. And yes, you are absolutely right. I think 2023 has been a phenomenal year, both from the issuer side as well as from the investor side. And as you pointed out, it is the retail which also has been a good beneficiary of this. At the same point of time, I think domestic institutions also have become a very strong player. And to that extent, a lot of IPOs are getting extremely good traction from the domestic institutional investors also. Interestingly, I guess one of the trend which we have been seeing here is that more and more companies which are coming for the IPO, investors are now happy to have a relatively smaller size IPOs and even the smaller size companies. In fact, if I just put the things in context, as you mentioned that there are almost 60 IPOs have happened, and statistically, that's a pretty good number. And if we see that overall, a median size of the IPO in this year has been 600 crores. That's actually lower than a 750 crore of a median IPO size, which was there in calendar year 22. Or if we go back 21, it was almost around 1,000 crores of median size. What it's showing is that to some extent, I mean, the entrepreneurs and the promoters of the companies, which otherwise were wondering whether their size of the companies are big enough to attract IPO market, are getting more and more comfortable. That there is a demand. There's a demand from the domestic mutual funds. There is a demand which is coming from a small and mid-cap mutual funds, as well as retail and HNI also are becoming a strong players in this thing. So as we see it here, with almost 60 DRHPs right now in process, I mean, the 27s have a valid observation, and you can see that, I mean, in the next few months and all, they would be approaching the market. Another 33 are awaiting the CB's comments on that. So IPO pipeline remains pretty strong for the next year also. In fact, I mean, I'm happy to say that this would be one of those years when, even if it is a election year,
Yes.
We may see a pretty strong traction of the IPOs there.
Yes, which is, of course, a departure from what we've seen in the past. But tell us about, since you made that comparison between what kind of monies has been raised through the primary markets in 2021 and then 2022. Tell us about the quality of IPOs now that are hitting the markets. How much of the euphoria in the primary markets this year do we owe to the growing interest as well of FIIs and FPIs and their call on the quality of offerings that are made in the primary markets now?
So, Vikram, one of the parameter, as I was listening to the talk which some of the investors were talking about, that how the retail investors have made money in most of the IPOs, and your data also showing that how 56 out of 60 IPOs have given the listing gains. So yes, I think, I mean, on a qualitative basis, we can have a slightly difference of opinion about the quality of the IPOs there or so. But the way I would see here is that what is IPO achieving? And another interesting data point which your audience would like to see is that if we go back to the calendar year 22, the amount which got raised from the IPOs, 29% of that was a primary and 71% of that was a secondary. Secondary means that was an offer for sale either by private equity investors or by promoters. And this year, that trend has actually improved, where 42% of the amount which has got raised is a primary money and 58 is a secondary. And I would like to believe that, I mean, if you take it on an aggregate basis, so this 42% is going either for a capex or for debt reduction or for anything which is more productive at the company end. To that extent, that actually is auguring well for the economy as a whole also. And that is showing us that the growth momentum for the industry is also picking up, where more and more companies are happy to put more money on the primary side of the thing. You talked about the FII part, and I think FIIs, we need to think about it, not necessarily just their participation in the IPO, but as I mentioned earlier, that by structurally what we are changing in India is that at least in the last 2 years, we have seen that more and more IPOs are coming from a smaller size as well as on a smaller market cap part, which sometimes don't get that sort of attraction from FIIs investors, because sometimes they want to have a larger float, larger capital. And I would like to say that that interest is getting reflected the way that the block trades are gaining a momentum in the Indian market. I mean, it would be surprised that in the last 9 months, from 1st April, if I say, not even the calendar year data, in the last 9 months itself, there have been over 1 lakh crore worth of money which has got done through the block trades. And these block trades have been essentially sold by private equity or promoters.
So comparatively on that count, for the kind of action we've seen in the primary markets, when you set that against the kind of bulk deals and block deals that have taken place through the year, what does it tell you about this kind of private equity deals coming through? And between block deals and QIPs and IPOs, how do you see the maximum buzz pan out in 2024?
So interestingly, in 2024, see why the block trade also become an important cog in the wheel for the IPO part is that, think about it, that most of these block trades have been done by the private equity investors. And gradually, they are getting more and more comfortable about the public markets and IPO becoming a very, very credible option for their exit. A few years back, I think that when the private equity investors were putting the money in any of the company, their ideal way was that either they would think of as an exit to a strategic sale to a strategic investor or to another private equity investor. But now, what the sort of a size which they have seen and the market depth they have seen, where, for example, in a particular company, between February to August, almost around 40% of the equity of that company, which a private equity investor was having, that got sold over block trades, amounting almost around 11,000 crore. It was not heard of. It was not possible earlier in the minds of a private equity investor. What it's doing is that they would be also slightly more aggressive in investing even in smaller companies and pushing these companies from a public market perspective. And that, at least, I mean, will really keep momentum of a public market IPOs also on. The second thing is that from the domestic investor side, if the mutual fund SIPs are anything to go by, again, if we see on the trend in the last 3 years, the average monthly SIP amount has got increased from 8-9,000 crore per month to almost now 15,000 crore in this year. And that money, again, needs to have a quality issuance to deploy. I mean, the whole of the money cannot get deployed in the secondary market. And again, that is one reason why investors, particularly mutual funds, are happy to see that even a smaller size IPOs also are attracting attention.
So when you talk about the retail participation, Vikas Khattar, when you talk about the retail participation, there is this notion that IPOs are not the most lucrative. Do you want to dispel that myth?
Look, at the end of the day, every equity investment carries some amount of a risk, whether you are coming through the IPO or whether you're coming in the secondary market part. But IPOs have become, to some extent, I mean, a preferred choice for the retail investors. In fact, I mean, from a regulatory perspective, from a structure perspective, when a certain percentage of IPOs in India are reserved for the retail investors, I see no reason why they should not come and invest in these IPOs. Yes, I mean, the quality part and all, which they keep taking calls. But if we see this year trend, I mean, most of the IPOs have seen retail portion getting oversubscribed, except maybe one or two very large IPOs where a retail quota might have remained unsubscribed. But otherwise, retail experience has been good. Having said that, these markets, these IPOs pricings, all those things are where people take their individual calls and really move forward. But I'm seeing that retail participation through mutual fund also is actually helping creating the more and more IPO culture.
Yes, indeed. The IPO culture is growing and it's growing strong, and perhaps we're going to see that much more traction in 2024. Vikas Khattar, it's a pleasure getting your perspective here on this edition of India Tonight. Thanks so much for making the time, and have a great start to the new year. Thank you.
Thank you, and wishing a very happy new year to all of you.
Indeed.
Thank you.